What's up, everybody? I'm Ryan Grace. This is Tasty Crypto, and this is Value Unlocked. And on today's video, I want to talk about a potential setup for a pairs trade between Ethereum and Bitcoin. Over the last couple of weeks, we've seen the price of Bitcoin outperform significantly. I mean, when you look at where this asset is year to date, it's up over 100%. And that's not to say that Ethereum hasn't done well too, but it's paled in comparison to Bitcoin's performance. Kind of wondering, given where we are, and when you look at the spread or you look at that ratio between the price of Bitcoin and the price of Ethereum, is there an opportunity here for the price of Ethereum to play a little bit of catch up? Could we put together a trade that would benefit? And there's a lot of ways that we could do this, but in the Tasty Trade platform, one of the easiest ways for us to construct this trade is going to be through futures contracts or micro futures contracts. But before we do that, I first just want to jump into what's been going on here in the market to provide a little bit of perspective. Ethereum or ETH has significantly underperformed Bitcoin over the short term, so we're trying to see if maybe ETH will play a little bit of catch up here. When I look at that spread again, we're at basically a multi-year low, but we know that there's strong positive correlation. That's important for structuring this pairs trade because we want that relationship to exist. And so the first thing that we want to focus on is the correlation. And right now that correlation is close to 1. You can see here in the chart that it has decoupled or detached, broken down, I suppose, at certain points in time. But we've seen this relationship come back in line and again, close to almost a perfect correlation. Very rarely do we see a day where Bitcoin is up in price and Ethereum is down or vice versa. So we know that these assets have a strong positive correlation. But we also know that Bitcoin has just crushed everything in terms of performance. If we look at Bitcoin futures or the price of Bitcoin here, it's up over 100% year to date. Whereas if we look at Ethereum, it's up closer to 50%. Not bad, but certainly is dwarfed by the outperformance we've seen here in Bitcoin. And so that's the reason for the trade. If we look at where that spread is, it's at its lowest point since July 2022. So based on this chart, all we're looking for is the price of Ethereum to start to outperform on a relative basis versus Bitcoin. And we can structure a trade, again, using micro Bitcoin futures and micro Ethereum futures to put together this trade, to put together this pairs strategy here. But before we do that, we first need to understand the two different products that we're dealing with here. So if we look at the micro Bitcoin future, we know that it's 1/10 of a Bitcoin. That gives it a notional value right now of about $3,400. If we use a price for Bitcoin, a spot price of $34,000, which is right where we are currently at the time we're recording this video, 1/10 of that is $3,400. The minimum tick size in that contract, how much it can move by, is $5 per Bitcoin, and the value of that tick is 50 cents per contract. So if we're long one micro Bitcoin future, it goes up by $5, we'd have a P&L of 50 cents. On the other side, micro Ethereum is much, much smaller. It's 1/10 of an Ethereum. And we know Ethereum, in terms of its price, right around 1,800, is a lot less than the spot price of Bitcoin at 34,000. This is going to be important when we size our trade, so keep it in mind. But at 1/10 of an Ethereum, it gives us a notional value, 1/10 of the spot price being 1,800, 1/10 of that is 180. So we have a notional value right now of $180. The minimum tick here is 50 cents per ETH, which is going to give us a move in terms of the P&L of 5 cents. So if we bought a micro Ethereum future and the price of Ethereum changed by 50 cents, we would have a profit of 5 cents. If a micro Ethereum future increased by $1, we'd have a profit on paper for our futures position of 10 cents, so on and so forth. So it's important to understand the two different contracts and how they're different in terms of really the notional value, because this is going to be very important when we size the trade. We need to size this appropriately. And so in order to figure out the ratio of how many contracts of micro Ethereum we need to buy versus how many micro Bitcoin futures we need to sell, all we need to do is divide the notional value of that micro Bitcoin future by the notional value of the micro Ethereum future. So if we take 3,400 and we divide that by 180, or if we take the price of Bitcoin at 34,000, we divide it by the price of Ethereum at 1,800, That gets us a number of 18.9. We'll round up to 19. And what that means is if we want to structure this trade to try to take advantage of a bounce in the price of Ethereum versus the price of Bitcoin, we're going to need to buy 19 micro Ethereum contracts for every one micro Bitcoin contract that we sell. If we were to do this with the larger futures contracts that have much bigger notional values, the math is the same. You're going to divide the notional value of that Bitcoin futures contract by the notional value of the Ethereum futures contract. And when you do that, you're going to come up with a ratio. It's about 2 to 1, meaning if you were to use the larger contracts, you're going to buy 2 Ethereum futures for every 1 Bitcoin future that you're short. If you use the micros, again, you're going to buy 19 of those Ethereum futures for every 1 micro Bitcoin that you're short. And that's, again, because of that notional value. So that said, there's one other thing that I want to talk about before we wrap things up, and that's how we adjust for volatility when we're setting up these trade structures. When we look at the volatilities between Bitcoin and Ethereum, they're correlated. Quite often when we see the volatility increase in Bitcoin, we're also seeing volatility increase when we look at Ethereum. But most of the time, the Ethereum volatility has been greater than the volatility that we see in Bitcoin. That said, over the last couple of weeks, the volatility in Bitcoin has expanded quite a bit. It's gone from about 40% to 60%. Well, Ethereum has seen a bit of an uptick, but it hasn't moved by as much. At the time that I'm recording this, Bitcoin volatility is about 60, ETH volatility is about 55. So if we do in fact want to adjust for this volatility differential, we need to divide the volatility of Bitcoin, 60, by the volatility of Ethereum, 55. And this gets us 1.10, which means we're going to need about 10% more of the micro Ethereum future if we want to weight these vols equally. So in order to adjust for that volatility, instead of buying 19 micro Ethereum, we might buy 20 or 21, and you can kind of play with that ratio a little bit. It's important to understand that the volatilities could change quite dramatically and very suddenly as well. But if we want to make up for that 5% differential here when we look at the Bitcoin volatility versus the Ethereum volatility, we're going to need about 10% more Ethereum in our trade. So another 1 to 2 micro Ethereum contracts that we want to buy versus that 1 micro Bitcoin contract that we're short. And then when we put that trade on, what we're looking for to happen is the price of Ethereum on a relative basis to outperform the price of Bitcoin. They could both go up, but in this case, we need the price of Ethereum to go up by more in percentage terms. We could also see that the price of Bitcoin might fall relative to the price of Ethereum, and this spread can work out for us as well. So it's really a pairs trade looking at this relationship, and it's a different structure that allows us to potentially find an opportunity across 2 positively correlated assets, regardless of what each one of those assets might be doing on their own in dollar terms. And because when we use these micro futures contracts, they're relatively small, there's not a ton of risk here. They're just not very big. So even if we were to see about a 10% move that goes against our position, so we're wrong by 10% in terms of that spread, rough math would say that we go from 19 Ethereum equaling 1 Bitcoin to now 21 Ethereum equaling more or 1 Bitcoin. So the value of Ethereum versus Bitcoin is falling in that case. If we're wrong by about 10%, given the size of this trade, we could expect to lose about $340. So it's not a ton of risk to put this trade on. I think there's an interesting setup right here. It certainly could continue to move in this direction, in which case we'd be wrong. But if you do believe that there's an opportunity to put on a trade where you're going to benefit from a relative outperformance in the price of Ethereum versus the price of Bitcoin, here's one way that you can structure it using micro futures, or taking a similar approach, you could structure this using those larger futures contracts that exist. But that's the trade. If you have questions about this, drop them in the comments below. If you're interested in more of the videos and the content that we're going to put out here at Tasty Crypto on the channel, subscribe to our channel. Make sure to like this video, share the video if you want to get this message out. We'll be coming back with more soon. Until then, I'm Ryan Grace. This is Tasty Crypto, Value Unlocked.